And it's surprising to me, somebody spending that type of money buying a business, and they choose not to get professional advice to get it done right. Another mistake that I see is that not structuring the deal properly. And here it's more, I'm going to give you more of a big picture perspective here. When I ask my clients they want to buy a business, I ask them, is it going to be an asset sale or a stock purchase or a membership purchase, or the LLC in the LLC case? In many cases, they don't know. In some cases, they do. So there's a distinction here. You're buying the assets of the business. You're buying the goodwill. You're buying the inventory. You're buying the going concern. You're buying what makes the business run. The customer list, vendors, everything. You're getting the contracts. You're getting everything that makes that business operate. The trademarks, intellectual property, telephone numbers, everything that makes that business run. What you're not getting are the debts of that business in most cases. You're not getting those prior obligations. You're only buying what is going to help the business run, what makes the business run and going forward. And there are different circumstances which one is better than the other. But for the most part, when somebody's buying a business, they're buying the assets of the company. They're not buying the actual entity. They don't want to absorb, if they have any tax liability of the past, they do not want to have that responsibility. They want to basically have the business clean going forward from the date of the closing of that business. Another mistake that I see here, I think it's mistake number 3, is that the purchase agreements fail to include very important provisions. I don't see protections in some cases. I see a one-page document. And I'm not exaggerating when sometimes I see a one-page document, handwritten, that say, I buy this business for X number, and they sign it. Okay, that's fine. At least it's something. But it's not adequate. And then it's not they're buying the business for $5,000. Sometimes see $300,000 or $400,000 in these transactions on handshake agreements or very, very poorly written documents. And it's surprising to me, somebody spending that type of money buying a business, and they choose not to get professional advice to get it done right. Then what happens is that a dispute arises as to the interpretation of what each party was expecting to receive or give, and litigation inevitably happens. That could be avoided through the purchase agreement letter of intent properly drafted by professionals.